NEO stock is trading at $3.82, and it is down over 93% from its all-time high of around $62 set back in February of 2021. We know the stock has been trending downwards for some time now due to increased competition and EV demand uncertainty, and the question people are asking is, if NEO is down 93%, does this present a once-in-a-lifetime buying opportunity? Well, some good news. NEO's ET7 is on the way. It was just released. The deliveries are starting soon. Their sub-brands are picking up in Europe. Those are about to be released soon. And so I'm seeing quite a lot of demand, or potential demand anyways, for these cars. And we will see if these recent announcements and deliveries can keep up their growing monthly delivery rates, because those are trending upwards. They are on the rise. One thing that I am not seeing a lot of coverage on is that China spent more than 200 billion won, or US 28 billion, on EV subsidies and tax breaks from 2009 to 2022, and they also have a newer EV incentive package released in June of last year, worth a total of 72 billion. That's going to run until 2028. And so if we have those tax breaks artificially propping the industry up for the short to medium term, I mean, this could create a downward pressure post 2028. And as I calculated in one of my previous videos, NEO's sitting on about 2 years worth of cash if they keep losing money at their current rate, which, I mean, is typically a bad thing, but it's not the worst when you consider they spent a ton of money last year on capital projects, on investments in their sub-brands, their battery swapping, etc. And they also did actually receive 2.2 billion from an Abu Dhabi fund recently. So, I mean, they aren't having a hard time finding financing, which is a great sign. And at its current price of sales of 0.9, NEO's sitting right around the industry average. So I wouldn't be surprised, honestly, and I know this is a bit of a bearish take, but if this came down a little bit in the short term, just given the current downward pressure on the stock right now. But I mean, medium to long term, I think that if NEO can keep up these delivery rates, which it looks like they can be, even given a probability of bankruptcy of about 57%, which again is pretty average for an EV manufacturer right now. But if they can keep these delivery rates up in the medium to long term, I think there's going to be some solid growth in the stock, even though short term, again, there is that downward pressure. So I would have to double down on my stance about NEO being a high risk, high reward investment. And like I said in some of my previous videos, I think we might see NEO stock continue to consolidate just a little bit. And personally, I would wait for the $2.90 to $3 mark before considering picking up any shares, as it's just a little too risky for me at the moment. Even though, like I said, that valuation is close to industry average, I do think that's going to pull back just a little further before, inverting and then hopefully riding the high of all these deliveries coming in. And even though some analysts are downgrading NEO, the average price target 1 year from now is still $6.92, which is an 80% upside from today. So, I mean, clearly, even given the downward trend, it's, the bullish sentiment is there. And even though it might take a little bit more time for NEO to get their deliveries up, like I said, hopefully invert this downward trend and start another bull run, because like Warren Buffett's famous quote, you need to be fearful when others are greedy and greedy when others are fearful. And right now, it seems like everybody's fearful at the moment, even though for the medium to long term, things are looking good. So there you have it. There's my stance on NEO. Please drop a like. If you have any thoughts, feel free to comment them below. And as always, you guys, thank you for watching, and I will see you next video.